I'm Charlotte McLeod with investingnews.com, and here today with me is Frank Trotter, CEO of Battle Bank. Thank you so much for being here. Great to have you.
It's great to be here. This will be a lot of fun.
Yes, I'm excited. So we are here in person at the Rules Symposium, and we've made it, I think, a couple of days into the event so far. So I'm curious to know if you have any highlights you'd share from conversations you're having, themes you're hearing.
Well, it's a lot of fun for us because we're typically a digital bank. We don't see people on a day-to-day basis, but now we really have what's old home week for us. This is kind of our traveling branch. People are walking up to the booth. People are opening accounts at the booth. They're asking questions. So it's really a lot of fun and very energizing for the folks for our folks. And people are asking questions about everything. Whether it's what do you pay in your checking account? How do you buy precious metals? How do you borrow against precious metals, currencies? How you deal with a retirement account. So it's been a lot of fun, and we've had every question you might imagine about banking.
Well, hopefully we cover some of those questions here. I thought, just for those who don't know, I think many people will, but can you cover the origin story of Battle Bank and a little bit about what it is?
Sure. Well, a number of us were co-founders of everbank.com way back in 2000. It's about 8 years before the iPhone, if you think about it in technology terms. But we were a direct bank, direct to consumer, used the internet. At that time, you couldn't do it on your phone. It's kind of funny concept for everybody today. But we ran Everbank from zero to about $28 billion, and then it was sold to a company called TIAA, which is a big retirement company. And it was their bank at that point, and it's no problem for us. But they chose to serve the clients that they had, of course. And I got to talking to Rick late 2020, early 2021, and said, I think we could do this again. They've kind of abandoned the target market that we had served for many years. They kind of changed the product set. I said, we can put something together, and why don't we call it Battle Bank? We're going to fight for their business and battle for better banking. So we started that process in 2021, 2022. It's been a long regulatory slog, but purchased a little bank in October last year. They give us a platform to work from and started opening accounts for clients on March 1st. So that's the beginning, and now we've been around for about 4 months, and things are going great.
That's exactly the direction I was hoping to go in, because I know at this event, I think year after year, people wonder, when is it coming? And you answered that question, I think, already. But so operational status, ready to go. You said people are signing up at the booth. So people online, they can also come and do this now.
Absolutely. Everybody can come in to the battlebank.com website, take a look at the product, see if there's something that interests you. Make your selection, say I'd like to open an account, and should go right through. If they run into any bumps, just give us an email, give us a call. We have actual humans on the phone. I don't know if that's a concept that people are familiar with these days, but really good, experienced bankers, not just somebody that's just starting out in the business. So it's a good experience. I've been banking with us since last fall, and it works great for me. And we do all sorts of complicated stuff. So it's a lot of fun to see it up and running, and really more fun than anything else to see the support of both our shareholders and the new clients.
Well, there you go. And I wonder, so are there any other boxes left to check, or you're good to go now?
We are good to go,
okay.
And there will be more and more through time. So
okay.
we got a lot of plans, and you can only do so much as a startup. And once we get the first round of stuff done, we'll go back and start doing some more interesting things.
And here's a little bit more of an existential question. So who is Battle Bank for? We can tell that here at the Rules Symposium,
Sure.
There's a strong audience for it, but how would you describe it?
Well, I think there was a joke a couple of years ago in the audience. Somebody asked, who is the person that should be banking at Battle Bank? I said, well, look to your left and look to your right. Certainly everybody here. If you extend that a little bit, it's typically a self-directed investor, somebody who probably reads independent financial research, listens to your show, things like that, but makes a lot of decisions on their own. Not necessarily somebody, we certainly have clients that do this, that just turn their money over to an investment advisor and has a 60-40 portfolio and never looks at it. They're typically interested in hard money, precious metals, gold, silver, platinum, and palladium. They probably invest in miners. And they're interested in the international world. They're not just focused on U.S. or Canadian economy. So there's somebody who has a little broader view, has their own opinion, is self-directed, looks at independent research, and has an interest in hard money.
And maybe we hone in then on the precious metals aspect, because I think that will be of strong interest to our audience. So, what are some of the things you can do with precious metals at Battle Bank?
Sure. Well, the easy stuff is you can buy, sell, or store gold, silver, platinum, and palladium. We're a U.S. bank. We have a national preemption. We can do that. We provide storage facilities if you want to, or we'll ship it to you, anything you want to do there. One of the exciting things, and something I look back and wish we'd thought of at EverBank, we didn't, is you can borrow against your precious metals. Particularly with the price run up, people don't want to sell it and incur a capital gain, but they need liquidity. We all do. And so we've created something called a MELOC, a Metals Equity Line of Credit. It's a trademark name that kind of looks like a HELOC, a home equity line of credit. You have an asset. We can take security interest in that. We'll store it. We're bankers. We like to get our hot little hands on it. So we store that. We put a security interest in it, and you can borrow up to 50% against that. You can borrow it, pay it down, borrow it, pay it down. It's a 5-year term loan. And so it's really an easy way to access that liquidity. And what's interesting is we've actually had more metals, dollar value of metals sent to us than cash since we opened. We didn't see that coming, but people are interested in providing metals for us to store so that down the road they can open a MELOC.
That is a very interesting trend. I do think it speaks again to who is the audience. Maybe we can talk a little bit more about gold, because clearly it's of strong interest to your customers and at this conference. Where would you place us in the cycle right now?
Well, we're kind of in a funny little world with the Iran war in particular. And we tend to look at things in the long term. I'm not a trader. I mean, people can trade and they hope they do well, and a lot of people do. But I look at the structural situation today. We look at the particular, let's just focus on the U.S. right now, but Canada obviously is just as important. But you've heard all the things before. Our deficit, which isn't going down, it's going up. The debt that we have, you look at the debt at the state levels is pretty significant in the U.S. And debt at the city level is pretty significant. So there's a lot of overhang there, and that speaks to what we would term as permanent inflation. The Fed hasn't hit their target for 5 or 10 years, 2%. Don't think they're going to be hitting it anytime soon. There will be some time when the official numbers drop down there, and they may do that as the oil prices dropped recently. But we look structurally at the market and say, over the next 10 years, there's kind of a one direction that we would expect. Could you have a global depression? Could you have a systematic collapse of something? Sure, we don't know. There's a lot of outliers that could occur, but given what we look at today, we sort of think that the U.S. dollar value, and that isn't necessarily against other currencies, but what you can purchase with it, Canadian dollar value with what you can purchase with it, is going to decline. Things are going to cost more in nominal terms, and if you hold gold, that should keep pace with that inflation over that period of time.
I think it's nice to have the look at the long-term view. Here, I've been talking a lot about, what's happening right now and what breaks us out of this lower trend for gold. Do you look at that as well, or are you keeping?
Well, we're certainly aware of it. I think, do we have another 6 or 8 weeks of volatility? Probably. They've reignited the Iran war overnight. So what's the news cycle look like today? Who's got the red card recently? But I think we could have if you look at all the big banks, and I think Grant Williams mentioned this the other day, is the predictions even at the big banks is that gold will be higher at the end of the year. Do they get it right? No, not necessarily. But I think that trend is up, and as more and more the mainstream institutions, whether it's an investment advisor or a big investment bank, start to add allocations to precious metals. There's a note that U.S. and Canadian investors have about 0.17% allocation to gold overall. That goes up to the traditional 2%. That's a one-way trip for cash or for the price.
And that goes in another direction I wanted to talk about. So when we saw much higher gold and silver prices earlier this year, I think that started to attract more mainstream generalist people into the sector. To what extent do you think they are in at this point? It sounds like not much, but we're getting there, maybe.
Not much, but I think people are certainly more aware. Just, anecdotally, I don't know what it's like for your daily life. There are more people talking about it. People obviously know that you talk about this in the market, so they're going to ask. People obviously know I do that too, but a lot of folks that I run into who would never previously have suggested it to their investment advisor or to themselves. Got a call the other day from a friend in St. Louis that was like, I need to buy some silver. I got a lot of calls out in Colorado. Where do I get some gold? So it's coming. Are we at 2% yet? No. Are we at even 0.25%? No. But I think that trend will change. And as people see that, the old axiom is, your price of gold hasn't gone up, the price of the dollar has gone down. And that goes for loonies as well. So I think that's going to become more and more apparent to people, and there'll be more hedging.
Maybe we talk a little bit about silver as well. Do you have a similar outlook as to gold? I know it's a much more volatile metal. It's got the dual usages.
Well, I think that you've said it out loud right there, is it has dual usages. There are good reasons that it'll be significantly used in an industrial sense over the next 10 years. And it actually is that part of the market where some of the smaller retail investors start coming in. Rationally or not, obviously it's a lot cheaper per ounce. Now we do an unallocated account, so it doesn't matter. If you want to put $5,000 into something, it doesn't matter whether it's gold or silver. It will, do fractional ounces. But for somebody who wants to buy coins or bars, it's a lot easier to stack them up that way. And I think more than likely, silver will, parallel, maybe not 1-to-1, any rise in the price. And of course, it theoretically beat gold last year, but it's kind of given a lot of that back.
I thought we could also take a look at the banking landscape in the U.S. I was looking back and remembering those bank failures that we went through in 2023, I think, and that caused a lot of concern. It seems to have fallen by the wayside. You don't really hear that talked about. How did you see that? Where are we at right now? Are you concerned about a reemergence?
Well, we're always concerned, and any downturn is when you have excitement in the banking sector. I'm an old guy, so I've seen a lot of these. Whether it's the early 1980s, late 80s, early 90s, 2000, there's one after another. It seems like it's every 10 years or so. Private credit's all in the news right now. Maybe that's more in the hedge fund world. Maybe it's in the banking world. But that, I think, actually speaks to some credit weakening in the commercial real estate sector, because I think a lot of the private credit's been done there. And I don't know about you, when you drive around your hometown, are there any lease signs up in the commercial buildings?
Oh, yeah.
All over the place, and banks have those loans. Private credit has a different aspect to it because they can continue to lend to those elements. If it's a bank, regulators are going to say, no, you have to write that off. And when we start seeing that is when I think there's some real concern. And we always have sort of in the back of our mind the leverage issue. Our view that Rick and I have is a bank should be well capitalized. We're going to be at 10% or higher, as far as we know for the future. But banks can go down as far as 4%. That's a pretty narrow margin. And if there's a downturn, if there are a lot of loan losses, if there's a blow up in one of the derivative portfolios, that can be eaten up pretty quickly. I'm not saying it's going to happen, but I think we do have concerns there. And I think Silicon Valley and First Republic were kind of unique situations. They had a business model that I guess I wouldn't follow. First Republic was a great bank, but they got upside down on some things that they just couldn't get out of.
And I think this goes into another direction I was wondering about. So I think many people might look at their bank and think, well, I don't really feel very happy with this, but I'm not sure also I want to go to a brand new bank. So what do you say to people who have a question like that?
Well, first of all, remember, we have, at least in the U.S., we have our friends at the FDIC behind us. So $250,000 is, and we strongly suggest you take a look and analyze your bank. I think you'll find that most banks are in decent shape today. They could go the other way. But I think there's a couple of things. One, we have an absolutely clean balance sheet right now. We don't have those commercial real estate loans. We don't have any legacy issues. We're building a bank where it's primarily invested in short-term, high-quality securities. That's should be a confidence factor. 2, you have the FDIC. 3, we have very strong capital. And 4, this is a bunch of people with a lot of banking experience. Doesn't mean we can't make a mistake, but our chief credit officer, 35 years, the director of operations and myself come out of EverBank that we helped run. Chief marketing officer has been around doing this for 15, 20 years. It's experienced people doing things that they know what to do. And we are not inherently a risk-taking organization. We like to have good solid loans like the MELOC. There's some others that we do, and we'll expand our verticals down the road. And I think you may have heard Rick say from time to time that we can't compete with JP Morgan Chase, and they can't compete with us. We pick things that we know, we understand, and we feel that we're very strongly have a good credit, conservative approach to all sorts of money we put out the door.
That makes a lot of sense. I also wanted to bring up on the Battle Bank website, you've got some commentary on things that people might wonder about in the banking sector. And there's a recent piece on stablecoins. How do they impact the financial system? And this is something I'm for sure just learning about. So any key quick takeaways you would share that people should know?
Well, I think there's a variety of different stablecoins. Tether obviously is the 900-pound gorilla. Everybody claims they've never had an audit. I don't know that one way or the other, but I'd kind of like an audit, just saying something. The thing I think we really focused on was the U.S. Genius Act, which was put into place about this time last year. And I don't think that makes a compelling case for individuals to hold those stable coins. It might make it easy if you're doing commercial payments worldwide on a common basis. That would probably be a good thing to have. But from an individual standpoint, there's no provision to allow the bank to pay interest or the issuer to pay interest. The issuer has to track all the transactions you do, which doesn't particularly bother me, but I think if people are looking for privacy, it's not gaining that advantage. And under the Act, there's no provision to issue a precious metals stablecoin. We'd love to issue one based in gold or silver. But it's not in the books. So, one of the banks that is focused on it spent about $50 million last year just building their compliance department. So that's a little out of our reach today. Maybe we can piggyback on somebody. But I think stable coins and payments outside the banking network are going to continue to grow. But at least for now, for me, the Stablecoin Act doesn't provide us that mechanism.
Okay, so maybe for
down the road,
future.
we'll be happy to look at it down the road.
All right, and speaking of the future, as we're getting toward the end here, so plans for the future. You mentioned checked most of the regulatory boxes and everything at this point. Do you have plans to expand to other countries, for example? I know you've got the U.S. and there's options for Canadians.
So we open accounts for Canadians today.
Yeah.
We'd love to expand. It's a regulatory labyrinth out there. There are a number of places like the EU where they make it intentionally impossible to compete, and that's fine. It's up to them. To the extent that we feel we can meet the regulations and treat customers appropriately in different countries, we're all there. There's certainly some ones we have our eyes on. Love to do Switzerland. Absolutely love to do Australia. Probably should be doing Mexico some point in time, where it's our neighbor to the south. And we'll look around and see what regulations allow down the road. There's an old joke in one of the old brokerage businesses is until I have every account in America and Canada, I don't need to go anywhere else. Not quite true, but we have a lot of work to do here first, and then we'll get to the other countries down the road.
Fair enough. All right. Well, I will send you back out onto the show floor unless you had any final thoughts to leave people with on either precious metals or banking, things on your mind.
Well, I think it's just been exciting to see everybody interested, first in their checking account, which is wonderful, and all the precious metals. So I just encourage everybody to take a look at battlebank.com. Come to the show next year. Make sure you sign up like now because they'll sell out again. And otherwise, come on the virtual show. So it's a great symposium, incredible amount of education, and we love it here. And hope you join us at Battlebank.
Very good. I love the excitement. Thank you so much for coming on to talk, and hope to do it again soon.
Thank you very much.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Frank Trotter with Battle Bank.